Hi guys, how are you doing? It's Zeno and today I'm going to be talking to you about the Hertz stock. And the Hertz stock specifically, what I want to talk about is why I think it's going to be a very bad investment for you to get started and why you should not invest into the Hertz stock right now. What is going on right now with the Hertz stock so that you know what is happening, and also what the Hertz stock is doing right now actually to trap a lot of investors into paying their debts. Recently, I got to this article on June 5th that I saw the Hertz stock skyrocket by 825%. And this is mainly done by a huge amount of Robinhood traders, which are basically buying into this stock. And their hope is that when this stock goes bankrupt, that when it comes back and comes out of Chapter 11 bankruptcy, that it's going to skyrocket and actually gain a lot of traction from there. But the thing is that you should know with Hertz stock is that it has a huge amount of debt. But let me go a little bit further and give you a little bit of company profile about Hertz before I go further. Because Hertz went bankrupt on the 22nd of May, and basically the stocks were as low as 41 cents, even like 40 cents. And after that, it surged 825% to a high of $3.70, which is absolutely insane. It even went a little bit higher. If I go here, it went up to $5.53, which is crazy. And the reason why this is crazy is when a company files for Chapter 11 bankruptcy, basically what it means is it's going to liquidate all of the assets and it's going to sell all of these assets of the company, and it's going to pay off all their debtors. And how it's structured, shareholders are the last individuals or institutions that get paid out from any of these assets if there's any remaining equity. So what is happening right now, first, all of the banks and the ones that have secured loans like car loans or anything like that with assets connected to it are going to get paid out. After that, it's going to be the bonds. The bonds are going to get paid out for basically anything that they have on that side. And the last part is you have the stockholders, and before that, even the preferred stocks that get paid out. So only if there's something left after everything's sold, the stocks actually retain value. What happens is, in most cases, like 93% of cases of bankruptcy, the stockholder equity gets wiped out completely. So what does that mean? Now, let's say you would buy the stock right now in Chapter 11 bankruptcy. What that would mean is if there's no equity left into the company, what's going to happen is your stock value is going to become worth zero. And when the company comes out of Chapter 11 bankruptcy, they're going to issue new shares. So your old shares are basically going to be worth nothing, absolutely nothing. Only if there's equity remaining after they paid off their secured loans and secured debts and the bonds and all the other ones, that's when equity would actually remain and the shareholders would retain the old stocks. But in most cases, the old stocks, they disappear and new stocks get initiated. So when you're going to buy into a company like this, it has to have some type of equity into the company left that the old shares would remain. Otherwise, your stocks are basically just going to go to zero. And what is really troubling right now, if you look at Hertz stock specifically, is because there's so many people buying these stocks, you have to take a look at what their actual value is, if there's still value into the company that the old stocks are going to remain. Because right now, if you look at their overall results, and I'm going to take one term here specifically, and that's the tangible book value of the share. And what does the tangible book value of the share mean? It basically means if a company needs to liquidate all of their assets, so in the term of bankruptcy, they need to liquidate all of their assets, what is going to be the value that's going to remain? So this is basically the key indicator to determine if the company actually has any assets available after bankruptcy. Now, if we go back to here to this ratio, the tangible book value of the share, it's basically going to be minus $20.66 per share. So there's nothing going to be remaining. You know, when this company goes bankrupt, when it comes out of Chapter 11, all of their stocks, old stocks, are going to be worthless. You're going to be paying for these stocks and you're basically wiping yourself out. You're not going to get any money from it in return. And you're going to lose everything. So investing in this stock right now is really the worst thing you can do. Worst thing. So, and you know, this company is even more horrible for what they're doing, because they actually recently, just like 2 days ago, they're issuing new shares to lure in people that are buying right here, of those new coming investors. They're luring in people by adding $1 billion of shares, and it was approved. This is absolutely insane that this is allowed to be done. A company that's in Chapter 11 bankruptcy is actually allowed to issue new shares. So what they're going to do with this, very specifically, is this company is issuing new shares so that they can get more equity from shareholders, that they can pay off their debts. So when they come out of Chapter 11 and they issue new shares, that's going to be more valuable. They're going to use your money. If you're investing right now into Hertz stock, they're going to use your money to pay off their debts so that they can come out more clean afterwards, which is absolutely insane that a company is allowed to do this. Really, this is like horrible. This is stealing money from people, that a company like this can do that and actually get away with it. So, yeah, guys, I just want to say that if you're going to invest into the Hertz stock specifically, only if you're doing it on short terms and you're trying to make a quick buck by buying and selling and trying to time the market in this one, okay, good luck for you. But if you're thinking that you're going to stay in the company after you after this company goes bankrupt and comes out of Chapter 11, you're not going to be there. You're going to wipe out. You're going to go to zero. You're not going to have any money left in the company. You're going to lose all your money. So if you're right now watching this video and you're thinking, okay, I made a good amount of money, get out right now, because this is not going to stay here. All the shareholder equity is going to get wiped out. It's the worst decision to stay in. So get out now. Otherwise, yeah, it's your own choice. So yeah, guys, that's what I wanted to talk about today. You know, things about this, I talk about my channel, how to analyze stocks and all these other things. So if this is content that you like, you think I'm explaining it in a nice way, consider subscribing. It's a new channel, and hitting that like button, helping me grow that channel also I would really appreciate it. And I'm looking forward to seeing you in the next video.